Hi, good evening, good afternoon, everyone. Welcome to this BFM Personal Finance webinar. My name is Roshan, I'm a producer and presenter for the Morning Run. And this Personal Finance webinar is done in collaboration with the Financial Planning Association of Malaysia. And today we're tackling the important topic of financial planning for your kids' education. This is, I think, one of the most important financial goals for many Malaysians when it comes to especially to their kids. But with the disruptions we've seen from the pandemic, health concerns and financial disruptions, how do you go ahead planning this despite the pandemic, even if money is tight? That's exactly what we'll be talking about today on this webinar, how to build that financial plan irrespective of the pandemic. And to help me with this, I'm speaking with Hooi Hooi, licensed financial planner with Coreplus Advisory, Fateen, Rosli, licensed financial planner with Vantage Advisory, and always with me here, Malek Ali, founder of BFM Radio and filife. To the three of you, a very good afternoon. And to everyone joining us today, thank you so much for your time. Please continue to share those watch parties with everyone who you think would benefit from this. And if you've got any questions throughout the conversation that we're having here, please put them in the comment section down below. Again, more than happy to get to all of these questions and more, as much as I guess time permits. But right now, Malek, I actually want to start with you because I saw this very interesting LinkedIn post you put up yesterday about the cost of education. And I would be lying if I said my jaw didn't drop through the floor into the ground, lower ground floor. So could you maybe just shed some of those numbers that you calculated yesterday, how you got there? And so yeah, how much do we need for kids' education?
Yeah, so yeah, I think as I was calculating it, actually, I did this as part of kind of like trying to figure out, I mean now in insurance, creating protection, and part of the why you insure yourself for is basically if something happens to you, who's going to pay for your kids' education, right? So as part of that calculation, I'm like, okay, so we use insurance to pay for family needs like kids' education and everything. But then how much do you need? And that answer is actually depends widely on which universities you're looking for, right? So it's crazy. If you want to go to the US, you're talking really about 70,000 US per year times 4 years. So that's about 280,000 US. Multiply that by 4.15 at today's rates. You don't know how US dollar ringgit will happen. But at today's rates, you're talking about 1.1 million ringgit for US education, US university education. Of course, without scholarships, if you're a basketball star, of course you get it free, right? If you're an American football star or soccer star, not football. But if you're the rank and file like the rest of us, it's 1.1 million. And then I tried, okay, wow, the US is crazy. Why don't I go to my sort of my alma mater? I go back to England lah. And during my days there, and during my time I was there, ringgit was 3 ringgit, 3.3 ringgit to one pound, right? So so now I checked it up again. What is the cost? And it's about tuition and living is about 450,000 ringgit over the 3-year program, 150,000 a year. So these are crazy numbers. And then so I'm like thinking, wow, in this day and age, can we our parents maybe could afford, some of us could, if they were still struggling at the time. How about parents of today? Can we afford that, right? Can we afford those kind of prices? And if we wanted to at least have a crack at it, have a chance of sending our kids to university education, can we prepare? What can we do to prepare for that financially? And I think today's conversations will be really interesting with Hooi Hooi and Fateen, because the good news is that they're parents too, as am I. Of different age. One is Hooi Hooi is teenagers, with 3 teenagers. I think Fateen with 2 starting to go to school children, 8 years and 5 years old. And you also have me, Roshan. I don't think you have any children, right?
No.
But for me, I have 3 children too. The first one is actually I'm almost I'm at Hooi Hoi's kind of level 2 in terms of that. Now my first one just entered university just a few days ago actually. So I think that's the thing. Just to say one more thing, there is still a big interest in universities particularly in the UK. I think almost 40%. I did a poll last week and on LinkedIn, and 40% of us want to send our kids to the UK if money was no object. US and Canada about 30%. Australia, New Zealand about 21%, and I lumped Taiwan, Hong Kong, Singapore, and Japan all together, and that's about 12%. So we still at least our LinkedIn audience still has that bias towards those, Anglo-Saxon, sort of Anglo universities, English-speaking universities around the world. But I think that's something we can explore too, whether that's really the right thing to do going forward.
All right, great. Thanks, Malek, for that. I think we've really set a lot of the groundwork here for a bulk of this discussion, which is how do we fund those aspirations, right? As they stand today, parents and maybe children as well have certain aspirations of where they want to go, whether it's the UK or US or Australia or wherever that may be. So I want to begin the conversation with you. How does the base of a financial plan look like when you're talking about education, right? What are some of the most important things to pay attention to? Because if I've heard correctly, I think education inflation is something around 6% at this point.
Yeah. For education planning, especially you want to send our child to overseas, you need to calculate in the inflation about 6 to 8% at least. So based on Malek's survey yesterday, I also do a quick calculations. Yeah, based on, let's say our audience here, you have a child, for example, 3 years old. Okay, so you still have 15 years time to prepare them for child educations. So based on Malek's calculation to go to UK, right? Because that is the most preferred country, the parents from his survey would like to send to, which is UK. For 3 years, it's about 450,000. So 450,000 today, if your child is going to go to university in UK 15 years from now, it will become 1.1 million. Okay, so when you hear about this figure, don't stop and say that it's impossible. You must immediately take action. Why? Because if you take action now today, it only costs you. I say only is because it's much lesser if you delay it. Okay, it's about 2,200 per month. Okay, so 180 months for 15 years time. Based on, they say, now the investment time horizon is still long. You can take a slightly aggressive portfolio based on 12% per annum return. So you will be able to meet your 1.1 million. But let's say you say, wow, it's too far. Let me have more money first. Then you delay and you do it, you start it 5 years later. You know how much you need to put in every month? It's more than double. It's about 4,700 per month. Yeah. So never procrastinate. And I would like to know, let you all know that if you put 2,200 per month, start from now, even though it's quite a large figure, but since you aim for your dream country for your children, no choice, you need to plan for it. No matter how, that is the dream, but the total cost or total amount that you really put in is less than 400,000. But let the money work for you. You can achieve 1.1 million. This is very important. This is we call it compound interest. Let the money work for you. Okay. Yeah.
So quite a lot of information there, Hooi, but I think a lot of big numbers being dropped, and I would say it's probably played into my calculation of whether I'm going to have kids. Those are some very, very scary numbers, okay? 2,200 ringgit a month right now to plan for kids' education to get about 1.1 million. And I think what you highlighted there was the importance of compounding, right? If you delay, yes, you have less time to help compound that interest and that return for you to help you fund that education. And this is, of course, I think the parameters you said there is your aspiration, right? You want your kid to go to the UK, and these are the different things that you have to take into consideration. But there are other countries. There is Australia. There is studying here. I myself studied in Monash, Malaysia. But then you've got young kids. How are you planning for your kids at this present moment?
Okay, for my kids, I started early. So because I think it's hard to get scholarships nowadays, a lot of competitions. So I am a product of from JPA scholar. But then I think because of that, this kind of the realization on the competition among the kids, a lot of brilliant kids. And then that's where you see a lot of private universities, those kind of things in Malaysia, as well as other universities in other countries. So like you mentioned just now, like Germany, other than the UK, Australia. So because from my background, I studied in Australia. So I am planning to send, my husband planning to send the kids to Australia. And then what we did from the past years, so we did save from the kids starting like few months old. So we save in like a very safe place in ASB as a start, because I think that education can't be like so volatile yet until I achieve certain amount. So after that, then only I am very comfortable to invest in further higher risk assets. Like you said, like that can gives me 8 to 12% returns, like stock markets or unit trusts, on equities, bonds. And then we did also bought units of condos for each one for the kids, just for like to minimize the gaps, if any, in the future, because our kids are only like 8 and 5. And then also, if they are very brilliant, so they have like scholarship, they already have a place to stay in KL. So yeah, that's our plan for them.
It's a very comprehensive plan there. It sounds like you've got the bases covered. You've taken a look at your own risk profile, and buying the condo is, I think this is not an uncommon plan amongst a lot of parents, I think, especially. So I'm 30 years old. So a lot of the people I grew up with, this was that generation of parents. They bought houses in different areas to help at least hedge the cost of education. So either you can rent it out and pay for it, or sell it, or like that other plan there for thing is that the kid can eventually stay there if needed, right? It's long-term planning there. And I guess this comes back to the fact that this highlights the fact that almost all parents want to give the best education they can afford, right? And this, I think, is beyond just a tertiary education. We're also talking about schooling, whether it's international or private. We've seen this, especially in the last 10, 15 years. And I think I want to take the conversation there and just talk about, when it comes to spending money on education, is there such thing as spending too much? From a financial planning point of view, how do parents responsibly plan without impacting their own retirement plans? I think this is not uncommon to hear of. Hooi, can we start with you?
Regarding your question, I would like to say yes and no. Okay, if that amount of spending for education is you already planned for and already budgeted for, so you just go ahead according to the plan. Of course, plan early, and you need to know where is the source and what is the plan B if something happened to your plan. Okay, so always have plan B. And is that allocation of money is come from your passive income, from your existing whatever saving that you already have, that is your active income. So you need to look into what is the source of income, so that you can invest, okay, into your child education. But I would like to say yes, that might be spending too much if that is not you plan for, but because you just want the best for your child, but if the resources is limited. So don't forget there's other important things and other financial goal. And a lot of parents, when they plan for the child education, always they want to think to give the best. But don't forget your child, they can get scholarship, they can get loan, there's many other alternatives. But for your own retirement planning, you can't get scholarship, you can't get loan for your retirement planning. So you must have a balance when you do the planning, yeah? Just work between the mean, don't too stress of yourself. Don't make yourself too stressful. Yeah. So early planning, know the cost.
Yeah, Malek?
Yeah, so I thank you, Hooi. So as part of this early planning, I think Fateen, you mentioned that you mentioned that the first thing you did was to buy Amanah Saham for the moment your first child was born. But you also and then later on you bought property and so on, and now you're looking into equities. But you also mentioned that you also bought a takaful plan, which didn't pan out, right? So I think I think there are a lot of sort of products out there that people say, oh yeah, buy this for your children, buy this for your children's education. What do you think what is the fine print here? What is the thing that you need to look out for? Why didn't the takaful plan that you bought for your children did not pan out?
Okay. So just now when Roshan asked about, is there spending too much on your education for your kids? So this is the things that you need to know whether the expenditure that you make meets your objective or not. So like you said about my takaful plan, yeah, so that's an expenses that I hope like it will cover for my kids' education plan, but it doesn't meet the objective. Why I say so is because of I paid like 3,000 a year. But then when I review, I actually engage a financial planner to review on my all policies that I've bought. So it's stated as education plan, but I review it again just now. So it's like it's only went through like 600 ringgit a year that goes to the savings account. So it means like it's only like 50 ringgit a month, which I thought like it's supposed to go more, and I can afford to save more, not just like 50 ringgit. So this kind of things this is like our biggest financial mistakes, and luckily we realized early. I just did like only like 5 years, so we withdrew from the policy. Why I said so is because of when I look at the cash value at the and the policy matured only when my son turns 25.
Which is too late
And
anyway. Which is too late.
too late, huh? Because he needs to go to university when he turns 18, isn't it?
Yes.
And then it's like 7 years too late, and then can only be for his wedding fund because no, I mean because the cash value is only like 64,000 to 118,000 on that range. So it's like so little when the agent say that this is education plan. So when I read again, so the sum assured is only about 119,000, which means if anything happened to my son, if he's sick, if it's like total permanent disability, or death happened, touch wood, so I will receive 119,000. That is not education plan. That is like a very high sum assured for a kid, but he's supposed to have only for covering his hospitalization. So that is the biggest mistake of all in my life. Like, but luckily we also save on the side, not just looking at the takaful, because I met some people, they rely on that takaful plan and they did not do any other personal savings other than spending on the paying for the premium. So these kind of mistakes that to me it's like sad to see like other people like taking advantage on this thing. But I hope I have like a pure say how to say I think maybe the person that sells to me, the person doesn't know that kind of thing. So that's why we just leave it at that. So like so we can just like yeah.
You I guess what you're saying is that no, it's okay, like you don't hold grudges, right?
Yeah, I don't hold grudges. It's just that, but this mistake, I hope people won't do it again. So what I want you to like, if you have education link plan, so look at what is the sum assured. So look at on the illustration table. So what is the non-guaranteed amount? So look at that. What is the maturity? Is it on when your son or your daughter turns 18 or turns 25? Those kind of things. That thing like because some endowment plan it's good. So you need to really look at review on your plan. So we don't want you to do like the expenditure doesn't meet the objective. We want you spend but it meets your objective.
Yeah. I know parents here, for example, they want their kids to have a good start in life, right?
Yes.
So sometimes they do buy plans which says, okay, when you're 25, this is what your children will have as a starting point. But that's on an education plan. Education plan, you need it at 18 years old.
Yes.
And you need, and therefore, I think we need to be very clear about the objectives of this insurance/investment plan, right? You really need something, as you said just now you said you were spending how much a year on this takaful plan?
3,000.
3,000 a year, of which only 600, only 20%
Yes.
went into the investment component to invest for the fund growth.
And it's like, and at that time, my salary wasn't that high. So I have to pay for my own also, like my own is like 3,600. So it's like almost like 2 months gaji of like paying for insurance. I mean like, yeah. So that's the, when we thought that that's the only the little money that I have, but and it's a wrong thing. So yeah.
So I guess the cautionary tale here is that if you don't know, I mean, have a look at your plan. If you don't understand it, whatever you have right now, you need to talk to people such as yourself, Fateen, who has gone through, and now you're a financial plan, you're a certified financial planner now. So
Yes.
you're paying it forward to everyone who wants to know about sort of how to save for your children. And likewise with Hooi Hooi as well. I mean, you're also a certified financial planner. So if you are not, if you're unsure about what your plans give you, what entitlements they give you, go speak to you guys, right? To say, okay, so that you can break it down for them and say, all right, you know what, X amount of this is towards your education, but this amount is for something else, right? So maybe you can consolidate or review or what, and so that you do actually get a real investment plan for your children's education.
Malek, I would just want to add, I reviewed one plan also from client of mine. So she came for me to review, and then the daughter is like going to the university in Malaysia, but then international university. So total cost is about 240,000, and then the cash value inside the policy, it's only like 24,000.
Wow. So you still have another 216,000 to make.
Yes. So that's the reality. So that's why it's saddened, because it happened to people around me as well. So yeah.
So don't be kind of like taken in by the title of the policy, education plan, etc. The title might say anything, but actually look at the real details. And if you don't know, and if you feel not comfortable, you need someone independent to look at it. Talk to a certified financial planner, which include yourselves here as well. Okay, fantastic. That's great. Hooi Hooi, yes, Hooi Hooi.
Yeah, I just want to add my own experience. When I just got my child, I think my first child 16 years ago, of course, the friends who do, there's no offense to those who are selling the education planning, but from my own experience is those who come to approach me saying that, okay, I buy the payer benefit, right? Something happened to me, my child is going to get the money 18 years later. I think that time is about 200,000 with certain money I need to invest in the education plan. But I know that there is a plan called buy term and invest the balance. So I prefer to use that money. I can still get the 200,000 protections. At the same time, I can get the rest of my money work harder to gear at a higher rate. Because I know conventional plan, maybe it only gear about 4-5%. So if really something happened to me for the conventional education plan, my child is going to get the 200,000 18 years later. But now, if I got my term life, I buy my term life, immediately the term life will pay my 200,000. Even though I put into a bond fund, let it grow, or even though put into FD, let it grow. Sure, I think years later, it's much more than the 200,000. And also the rest of the money that I save, I continue to invest. So I think when you want to do anything or any investment plan or buy any insurance for protections, you need to use the right tools for the right objective. I think that is very important.
Okay, great. Thank you very much for your experiences. Hooi Hooi, just wanted to say, you have, as I mentioned just now, you have an 18-year-old, a 15-year-old, 16-year-old, and a 12-year-old. How have you planned for their education? We heard about Fateen. Fateen immediately, and the moment the baby was born, boom, she went to ASB. She went invested in ASB, and so on. But for you, what did you do? When did you start saving for your children? Do you know how many children you're going to have when you had your first child?
Yeah, no, of course. But when my first child was born, I already in financial line. Okay, so I started the regular saving every month from the day she's born. So whenever, like for example, in Chinese New Year, the birthday, they receive whatever pocket ang pao money, I will all go to the funds. Okay, so the fund is growing. First saving is very good, especially when we have a goal, we know how much we want to save. At the same time, I try to build for my careers with so-called passive income. So we go both ways. But always when they grow up, that even though they are 10 years old, 12 years old, I already tell them, I want them to be proud of themselves. So I don't want them to actually to enjoy all the educations paid off by pharma scholarship, papa mama scholarship. I want them to also, because for myself, I actually self-finance. When I talk to them, I feel proud. I say that, okay, mommy is from scholarship, loan, and also self-finance. So I want you all to have this pride as well. So mommy won't fund for you for the 100%. So certain percentage you need to take care of yourself, and I will do my best to fund. Yeah, so it's regular saving to answer to Malek's question. All my 3 child have regular savings. Yeah. And
Fantastic.
now that some of I have 2 child who actually have their small business. I encourage them to do self-finance. So their school also get them to do some small business. So whatever profits, I help them to invest. So that will help them to fund for their education as well. This is I want them to do it for themselves.
Okay.
Good.
We have a question here from Facebook. I think this comes from our conversation just now, Fateen, about making sure that whatever insurance policy, education, investment in insurance policy. How do you read the fine print? Are there any tips? This is from Tania Viknesri. Are there any tips or keywords to know what the insurance policy is not what it is? For example, they say the education plans, but actually there's something else.
Okay.
Is there any keywords and things like that? Any thoughts on that?
Yeah, keywords. I don't think it's like keywords that will be apparent unless you see that, like you said, looking at the fine prints. What does the policy covers you? And then first thing that you can look at the appendix on the illustration table. So what is the benefits that you will get? So you can see the non-guaranteed amount. You can see how much in a year that goes to the cash savings account. So you can look at that, because in insurance, there's insurance or takaful, there's 2 parts of it. It's like one is for the cost of insurance, and another half is, or lesser than half, sometimes it goes to the savings. So if you want to look at that, have a look in the illustration table. Also on the maturity, how long does the policy mature? When will the policy mature? Those kind of things. And then you can see whether, you can also do some calculation on the internal rate of return. How much is the value and how much is the cost that you pay? So you can see what is the internal rate of return. And you can compare if you do savings or investment outside, whether like unit trust or whether it's like the stock markets, those kind of things. You can compare, or even some policies also provides that lower returns compared to SSPN. I've seen that. So SSPN can be another tools for you to save, like also, and then it's also for tax relief purposes. So there's dual purpose there.
Can we go dive a little bit into SSPN? Because there's a question here on Facebook by Jason Yep. He says, in terms of savings of kids' education fund, what about investing? He gives a specific number, 8,000 annually into SSPN, which also entitles for income tax refund. Would this be a better option? So you seem to have a favorable view of SSPN, Fateen. Can you go into details a little bit about how much you're entitled to invest into it and so on?
Okay, it's not that favorable. It's just that me being optimizing on the tax relief. So yeah. So the maximum for tax relief for SSPN is 8,000 a year. So it is like per individual. If like you, husband and wife, is a taxpayer, so each of you entitled for 8,000 a year. Wow. So provided that you contribute in the SSPN. So that is one of the highest tax reliefs that is offered by LHDN. So for me, like what we advise to clients, usually SSPN will be a vehicle for you to optimize your tax. Yeah, that's the only purpose. And then also because the second one is because you your kid will entitle to go to for loan under PTPN if you need it, that money later. So yeah.
So SSPN is the National Education Savings Scheme, if I'm not correct. That's
yes, correct.
Right. So how do you go to your bank to apply for this? Do you go specifically to PTPTN to get it? Because I think it's administered from them.
You can go online. Go to SSPN online. You just can Google. I can't remember on top of my head on the on the link. So you can just go there, and then you can just do the regular savings plan, those kind of things. There's online. Also, you can also walk into the banks or walk into the PTPTN branch. So yeah, there's 3 ways.
And these are plans that you can only do for existing children, right? If you don't have kids yet, you
Yes.
can't be planning ahead for them just yet.
Yeah.
Below the age of 18.
You can also do for yourself, but there's no tax relief. If you do for your children, there's tax relief. So that's the yeah.
Is there an investment rate of return that is projected or
Oh,
guaranteed?
okay. It's around 3.75 to 4.25. So that's the range. Yeah, for the past few years, it's only like 4%. So it's like just enough to beat the inflation, but not the inflation of education. But then, like I said, the purpose is different. So that's where we advise client. It's only like for tax relief purposes to optimize that. Also, secondly, is if you need in future for education loan from PTPTN. So yeah.
So actually, it can be quite substantial because if there's two of you talking about 16,000, and if both of you are in the 25% bracket, right? Of marginal tax rate, that means
Yes.
basically you save between the two of you 4,000 a year in taxes, but you retain this 4,000 a year in the SSSPN account, right?
Yeah.
So in a way, it's a contribution by you to the government back to you.
Yes, correct. Yeah. So I mean, it's a one type of ways for you to like look at it that way. Like for me, I have like 2 kids, so one for myself and one for my husband.
Roshan?
I mean, really good points there. And thank you so much, Jason and Tanya, for the questions. Please, anyone else who's watching, please give us your questions. We're more than happy to take a look at them and try our best to answer them. Now, if you've just joined us today on today's BFM Personal Finance webinar, we're talking about how to plan for your kids or future kids' education despite the pandemic. Irrespective of the situation today, there are many things to take a look at going forward. And as usual, all these webinars are done in collaboration with FPAM, the Financial Planning Association of Malaysia. And joining me today, Hooi Hooi of Coreplus Advisory, Fateen Rosli of Vantage Advisory, and Malek Ali of BFM Radio and filife. Now, before we move on to this, the second part I want to take a look at is the situation if you haven't planned in advance, right? If you haven't spent, your kids are maybe in their teenage years now, you haven't planned, we want to take a look at those options. But before we go there, we're talking about the Save SSPN, which is basically ways to keep that money that you're saving for your kids' education. Hooi, what are other good ways to keep that money saved for education? So we've touched on insurance, we've touched on SSPN. How should you invest this money or keep it in FD? What are your thoughts on this?
For myself, I prefer to put into a portfolio of asset allocations. So when the investment time horizon is still long, so you can allocate some fund into a more aggressive portfolio. So, and because of unit trust, they can allow fast savings. So after you know what is your investment time horizon, you estimate the total cost of the educations. Roughly, you know where you want to send to and what is the total cost after you've done the survey. So we assess the existing asset you have. So what you need to do is just fill up the gap. Then we find a tools. So for myself, I used for saving to unit trust funds. Initially, will be into a more aggressive portfolio. Then later, when it's nearer to my child's education, for example, 5 years before the child is going to use the money, then I will slowly allocate to more fixed income, more stable portfolio. Then slowly it will ready for my child to use the money. Yeah. For property, I'm not so fancy, but even though I plan one for them, because of the liquidity problem, unless I really need to plan early, because I have one condo. Recently, I'm thinking to, because the tenancy agreement and I want to rent out. They also have problem to rent out because of the pandemic. And also, if I say that, okay, if cannot rent out, I want to sell. Also not easy to get the price that I want. So when it comes to education, we need to take into all these sectors into considerations. Yeah, if you take property as well.
Okay, so on Hooi Hooi, on that point, so now we have Fateen who bought a couple of properties to fund the children's education in the future. So now their oldest child is 8 years old. At what point you should start thinking, oh, I need to be able to think about whether I should liquidate now or later, right? At what age do you think, if university age is 18, when should Fateen kind of like start thinking about liquidating this property for their children's education?
For property, maybe you take about one year, at least 1 year, because if market is volatile like now, maybe if let's say you don't mind the price to sell at a low, then you can plan it in shorter period. But if let's say you have desired target price you want to sell, maybe you need to plan it earlier. Because I noticed that even though that many people come and view your house, but the price that you want to offer, but not meet their budget. Yeah.
So
and also to get the money, it also the person need to get loan, and also not guaranteeing approval from the bank if time is bad. When time is bad, your own cash flow also is tightened up, your investment may be also low, and you want to sell the property, is cannot sell at the target price that you want. So a lot of things come in, and the person want to buy from you, they cannot get a loan.
Yeah.
So plan earlier.
So plan earlier. I would say even 3 years, right? Even 3 years before.
Yes.
Even 3 years before you already start thinking about.
2-3 years. Yeah, if you want to ensure.
Yeah, that's right. So I think there's a question here from Harry Chung, who says, for kids education planning, will you recommend a regular saving into other investment vehicles like ETF as opposed to education plans? I think we already spoke about that. Yes, I think we said that basically when we say a regular savings plan, it's not a regular savings plan into an insurance plan and things like that. What we're saying is a regular savings plan into this portfolio of assets, right? It could be either. So I think it could be equity, it could be a unit trust, it could be ETFs, it could be, as Fateen says herself, is a unit trust form of it's ASB, as well as property, right? So I think to Harry Chung's question, when she says a regular savings plan, it doesn't mean regular savings plan into insurance. It's a regular savings plan into equities, regular savings. So long as you set aside something every month, right? Another one, which is really interesting also, right? Because in Malaysia, we have suffered a currency depreciation. As I mentioned earlier before, when I wasn't studying in the US, it was 2.5. Now it's 4.13. When I was in the UK, I've been very lucky. When I was in UK, it was 3.3. Now it's, okay. So I can't even keep track now.
Sorry, I have to laugh at those rates. That's madness.
Madness, right?
That's incredible.
Yeah. Oh, come on. Singapore was 1.1. Now it's 3.
You're hurting me right here now. Okay.
Sorry, man. I'm really right here. But how do you hedge against these sort of like, if the long-term view is that Malaysian currency will continue to depreciate because of political instability and our politicians can't really get their act together. Let's be serious about it. Like, they can't get their act together. We're fracturing in terms of politics where people don't invest. Folks do not like that. Investors do not like that. Currency investors do not like that because it has a dampener on your currency. So there's a view. If your view of the Malaysian ringgit is depreciating, how do you insulate your investments from this ringgit depreciation, right? So ASB, I know. I think when Charles was at PNB, is it Charles? Sorry. One of the issues was basically that was EPF. Essentially, most of the investments are domestic because most of their customers are domestic. Therefore, the expenses are domestic. Whereas education, if you want a foreign education, the currency is foreign currencies. Sterling, it's Australian dollars, it's US dollars. How do you insulate your investments from that, from currency depreciation?
Okay.
Who wants to take this very complex question first?
Okay, so if you already thinking of sending your kids to a specific country, so what you can do is that you invest in that currency from now. So that's another way, because if you invest in Malaysian ringgit and then you only want to convert it when your kids going to university or college, so you might get hurt. So like the points that you said just now, like Malek, the differences of currency. So you can always hedge the currency by investing in the fund of that particular currency. Yeah. So we do provide that kind of services to our clients. Yep.
Hooi, on that point?
I agree with Fateen. So besides you invest into that currency, I don't like the dual currency bank account that offered by the bank, because that only currency appreciations, but the time when you get the money, the return from the account actually is very low. Sometimes it's no point to doing that. So I prefer to pack into one investment vehicle. It's still investment. The return is still can at least hedge inflation or much better than inflation. It means that our money is still growing. At the same time, the currency is hedged. For example, I have one investment. I invested in 2013. Okay, until now, because I think I'm quite lucky lah. The investment grow about 5 times, but because the currency exchange, it grow 8 times. Yeah. So with that, we able to hedge the currency. And you can do it slowly. If let's say our capital is limited, our resources limited, you can just build up through DDI locally. Once there's bigger amount, then you do whatever needed for currency hedging.
Okay, great. Yeah, so I think the basically how you hedge that is to basically look for investments in that currency.
Yes.
Don't look for don't just buy the currency.
No,
yes.
no.
You want to
No.
get returns from that. In fact, some places you have to pay interest to keep the currency, but invest in that currency. So you're right. I think if you are, for example, if you are investing, for example, if you're trying to send your kids to the US, US is a very deep market. So buying ETF in a US ETF is just a natural hedge. That means US dollar goes up, your value of your investments will go up. US dollar goes down, your investment value goes down in ringgit terms, but not in US dollar terms. So you completely hedge that out. So I think that's I think smaller markets like Australia might be a little bit harder. You need to diversify a little bit. You don't want all investments in Australia. But I do know of some parents who actually they know their kids are going to Australia, they buy Australian property. If they want their kids to go to UK, they already start, when the kids are just dawdling around, they're visiting showrooms and virtual showrooms. They're sort of, I want to send my children to UK, I'm going to buy a property in UK, right? So I think there is that kind of forward thinking that happens.
Yeah, also Malek, my husband already also shared with me this morning about his friend. So the parents bought a property, so in Melbourne, I think, if I'm not mistaken. So, and then they asked they also rent out to other students.
Yes.
Yeah, so they're only paying 20% of the down payment, and then for the fees, for the tuition fees, other than that, the kids manage and can get the living expenses from the tenant. I mean, from the friends, and then he can also brought back some money at the end of his education year. So so that's another form of investment.
Yeah, I know of several of students when I was at university whose education was paid for by the renters at their place, as well as the capital appreciation that happened during the period where we were studying. So education paid for by the property market. Don't just take that with a pinch of salt. Not all property market goes up. It sometimes comes down, right?
Yeah.
So
all investments like that. There's risk, there's rewards.
So this is one from Sunny 2, a question from Facebook. May I know, does a PTP and education loan depend on how much we put aside inside SPN? Maybe we'll come back into that in terms of comments and so on. I like to move the conversation a little bit to, okay, now you were not one of those people. Times were hard when you had your first child. You were struggling to make ends meet, so you were surviving, right, when you had your first child. Now your child is 16 years old, right, and you do not have enough. You do not have that 210,000 spare, and so on. You have maybe you can put in maybe 50,000, 80,000, right? That's what you have right now. What are the options out there now? You've come to this situation where you know that I know I should have done it, but I didn't do it. Circumstances. What can you do now? So, any thoughts on that? What do you do now? If your kid was 16 years old, university is about 2 years time. 2 years time. What do you do now? Hooi?
Okay. I always educate my child to be more flexible, adaptable to what is the situations of we are having now. So let's say if I'm not afford to send them to overseas education, their dream education, so we look for what is the best locally. We can do twinning. Same, we can still go to the university, get the same degree, but we do the twinning locally. Another thing is you can apply for the scholarship. There's plenty of scholarship out there. So I would get the child, please study hard, and also find out the criteria. What is the criteria of the university that you want to go to. Be prepared either in terms of co-curriculum, in terms of so-called academic wise, how to fulfill that so-called to meet the scholarship. Besides that, we can also part-time. We only sponsor them for the first year. We're looking into whether they can go there. Some countries are allowed for part-time. They can do that part-time. For example, in Japan, you can sponsor them first year, the air ticket, the cost for the school fee, and also for some expenses. Then later the child, they do part-time while they study. So there's many choices. There's no so-called end route for whatever inspiration you want to do.
Fateen, your side? What would you advise?
Okay, so if like it's really short term, so you have really to look at one thing, what's the course that your children want to go into. Also on the university. So if your dream of university can't afford to go, I mean like on the country that they wanted. So maybe we have to give them the expectation. Maybe this country, another country will be like lower cost, but have the same cost. I mean like maybe better. So can see whether they have to do some research. Our kids and us also, we need to do some research on which university or country that gives some niche, because a lot of people going to universities now. So and then also because if cost is the concern, then we have to look at where to go, because there's a living cost also that you need to spend on if it's self-sponsored. Also like Hooi Hooi said, it will be like maybe half cost taken by the parents, and half cost maybe the kids can go working part-time to sustain their living. So that might be the compromise that the kids needs to make, also the parents needs to make. So there will be like a lot of communication and conversation on these kind of things, because obviously parents wanted to give the best for the children, right? But then sometimes things are not like a bed of roses that we wanted. So things that you need to like have a compromise on where to go, the course that you wanted to go to be in, also, and like Hooi Hooi said, twinning program, or you can go also to Malaysia international universities. Might be cost lesser, so because you can stay at home, this kind of thing, just commuting to university. And another thing, worst come to worst, just like Malaysia University, and we have the top universities in the world as well in Malaysia. So it doesn't deter you from having your ambition from these kind of things, because you can still go to a country of your choice postgraduate if the push come to shove lah, those kind of things.
Yeah.
So it's really that
I
expectation.
just want to add, for some countries, especially Japan, I think Germany, there's many countries that do not use English as their medium. But if you're willing to pick up their language, they can offer, even though Korea, even though China, they actually can give you not only the school fees, so-called scholarship, they even give you allowance for the living expenses. So there's a view, there's a way. Just you must communicate with the children, and we do some homework, and the child do the homework, get it prepared earlier. Like Malek just now mentioned, 16 years old. So you have 2 years to go, be prepared, communicate well. Yeah.
I want to give a very good, a wonderful example. I went with my daughter on a university hunting trip, and we ended up in Canada, where she ended up now. And we were in Montreal, and we visited McGill University, right? And on the tour, there was this person who spoke with her slightly. It sounded a bit Asian, a bit Canadian, a bit American, a bit French. I'm like, siapa ni? But he looks like a Malaysian. And I asked him later. He was a Malaysian. He is a Malaysian. His parents worked for Petronas, and Petronas sent them to the US. And he actually funded his whole education because he was willing. He picked up a lot of local grants. He then said, okay, I'm going to learn French. In Montreal, that's French is a language. of choice. And because of that, the willingness for him to sort of move to Montreal and do all that, learn French, he got his pretty much education for free in McGill University. So it's enterprising. I take off my hat to his enterprise in doing things like this. And there's a lot of stories about people who are willing to look at the fine print of education and see where they can go. I know one of my daughter's friends went off to Amsterdam at much lower cost than the cost to Canada. I guess my daughter's very lucky. He has a father who can, but they went to Amsterdam. I know, for example, there was another a newspaper editor I know that sent that wanted, or the original plan was to send him to Germany. And why not, right? And I think one of the comments I had yesterday was, hey, if anything, one thing that your child can do to lower his or her university cost is to learn a different language other than English. Yeah, Hooi Hooi.
Yeah, Malek, I talking about this. I also my own experience because of my family background. I since young I study hard self-finance, even though I finance for my brother's educations from my part-time job and also some loan, study loan, which is fully paid off now. But I want to have an overseas study experience. So I learned Japanese. I got the Japanese government scholarship to go there to study for 1 year. And when I touched down there, I want to learn more about Japanese as well. So I go to the restaurant to wash plate, after school, So from the experience, not only I make my Japanese proficiency better, I get the local friend from Japanese. I actually earn the money. I can travel, use the money that I earn there, travel. And also I can bring back the cash to buy my first car after I graduate. So this is the money can buy experience when we are come from the family that we can't afford. If everything, let's say our parents give us, so maybe this kind of so-called experience you're not able to give to your children if you provide everything. Yeah. So something.
Roshan?
On that note, actually, I want to touch on this very similar vein, but let's spend a few minutes. We've got 7-8 minutes left. Let's talk about PTPTN for a bit, because this is the situation, right? Let's say you haven't saved, you've got your kid is 16, you got on to 18. Getting that, setting those expectations and communicating with your child is going to be the most important thing. I think that's something we've clearly established here. One of the options that you have, if you're going to study in Malaysia, is PTPTN. We've talked about the SSPN plan a little earlier. That's for savings. I had plenty of friends when I was in Monash who used PTPTN, who were in Sunway, who were in Taylor's, and they funded it. And essentially, this is on you later on, right? You're going to have to pay that back later, but it is an option for you to fund, at least partly fund your kids' education. Fateen, could we get a few thoughts from you on PTPTN and yeah, basically, as this as an option for your kids' education?
Yep. So I think PTPTN is one of the ways for you to fund your education in Malaysia. So as you know, the loan interest is low compared to others, especially compared to personal loan, because I know some people take personal loan to fund their education. So this is one of the avenues for you to consider if there's a gap in your education fund for your kids. So yeah, so if you haven't saved in SSPN, do so, because one of the things is for tax relief, or second thing is for you to use it for you to be eligible to get the loan from PTPTN. Yep.
Yeah. Sorry, on that point, is there there's a question by Sonny PS, Sonny 2. May I know, how does a PTPN education loan, education loan depend on how much we put aside inside SSPN?
If I'm not mistaken, it doesn't rely on the savings that you have. So it's just that if the savings that you have will minimize the loan amount on the gaps or the need for you to repay back. So that's it. Not on the amount of the loan given to you. It doesn't. Yeah, I don't think it relates to how much you save.
Okay.
In that.
Right.
Yeah.
Okay.
At least. Actually, I have one thought also, I mean, like with our discussion just now. So when you talk about, Malek, you talk about what if there's gap we went 2 years. But what if in positive way, we have a lot of fun, but then because of this pandemic era or this kind of things, you can't travel to the countries that you wanted to go. So that's another thing. I think we need to address that in this moment. So I think that's also where you need to like manage the expectation of the kids as well. I mean, because of this kind of ways, because you maybe cannot go to US. You can only go to like maybe Asia in this next 1 year or 2 years, those kind of things, right? So yeah, so I think that's another flip side. Not just you have enough of fun, but then you're not able to go to the country that you wanted to. So this is also managing expectation for the kids as well as for the parents. So also I think it's not end of the world when you cannot go to the country that you wanted now. So maybe you can go later. Yeah.
I have a real experience of that. I think my daughter started her time in Toronto, and she's doing it from Singapore, where I am right now, because she's not allowed to travel into Canada. Well, not without a lot of restrictions. So she decided of her own accord to do at least the first semester online. And actually that saved me some expenses. I mean, that saved me at least so far 10,000 Canadian in residential costs, but but I think that was a boon. I also wanted to say, I think in a way, in sort of closing remarks to a certain extent, is that university education is not everything. And I think in this fantastic, I mean, it's about the university of life. And I think there's a big body of educational opinion, or even of employer opinion, that what we're looking for is not your 3 years concentrated study, but we're looking at your experience over your lifetime when we're trying to employ you. Right? So it means before, it was like, oh, study for 12 years, university for 3 years, then work and then retire. Now, I think what we're seeing is more continuous education happening. And so it's not the end of the world. Basically, you can work for a while and then come back to education when you have a bit more funds, as you say, what Hooi Hooi did, right? Basically, learn the language, go to university and things like that. So I think, and as an employer, I am more intrigued by people who do that than someone who just did the standard route, right? Someone just came, did the standard route. I'm like, okay, I put this in one pile. But sometimes someone catches my eye, which is someone who's worked here, worked there. I'm like, wow, this person's really done a lot of things, and in different countries of his or her own accord, and worked for a while, studied for a while. I think that's just to say that, it's not at university, it's not the be all and end all. And certainly not, you don't have to do it when you're 18 years old.
I mean, and there's also vocational education. There's so many different things, training courses you can go for. Coding, I mean, there are different things. I mean, coding and tech seems to be the next wave of things. There are plenty of courses online now. We've got Udemy, Coursera. There are more, but I can't name them at this point. This didn't come to the top of my head. Yeah, I think we are just about ready to wrap up. Hooi Hooi, I think you haven't said anything towards the end of this. Any thoughts on PTPTN or education or university or planning? Anything to just wrap up your side of things?
Yeah, for my side is just one thing: start early, start now with your child. Yeah.
And Fateen, anything to wrap up from your point?
Okay. Previously, sending your children to school or university, it's like buying a car. Now, the cost is like buying a mansion or a house, a big house. So, I mean, like Hooi Hooi said, start early, but then do know where the place to save. It's also equally important. Also, at the same time, have a diversification of your assets, because you don't want to if for example, one property is for education fund, but then what if like at the time you want to liquidate it, the market it's not in your favor. So have a diversification of your assets allocation, even though it's for your education fund for your kids. It's not just for retirement, but also for education plan. So have a clear mind on what amount that you need to have, but then don't really strain on your expenses. I mean, like, don't really strain on that, because you need to have maybe another kid coming along the way, or those kind of things. So you need to be flexible. Have that expectation, communication with your kids also. If it doesn't meet their expectation now, So have that really conversation for them. I think kids we think that they are not mature enough, but I think with my 8-year-old point, with my 8-year-old boy point, I also can have a talk with him on needs and wants. He even taught his sister or needs and wants. So yeah, so have a good conversation with your kids. Don't expect them. They do not have this rational mind or those kind of things. Yeah.
I think that's a great point to end on, Fateen. End of the day, communication with your kids, knowing how much you want to spend and save, and also balancing that out, right? You don't want to jeopardize your retirement because you can't take a loan out for your retirement. You can take a loan for education. These are all different things. We covered this earlier in the conversation. So if you joined us late in, once this is over, go back to the start, watch it again. This was a great conversation to have with all of you. Thank you so much, Hooi Hooi, Fateen, Malek, for joining me today. It was a thorough pleasure to speak to you all today. And webinars are not over for this week. We've got another one on Thursday. This will be the Back to Business Weekly webinar, talking about the new face of consumers. The pandemic has unveiled this new face of consumers, and this webinar is going to take a look at how to identify this group, what their purchasing behavior is, and how to keep your brand at the top of their mind. Get that so valuable mind share. That's happening on Thursday at 1:30 p.m. right here on BFM's Facebook page. Till then, until Richard Bradbury takes that segment on, thank you so much for joining me. Thank the three of you for your experience and your expertise today. And until next time.